The rounding top is a pattern that doesn't happen suddenly. It doesn't shock the market. Instead, it forms slowly and quietly, showing how an uptrend loses strength over time until buyers gradually step aside and sellers take control. This pattern is not about panic, it's about fatigue. A rounding top forms after a sustained uptrend and looks exactly like its name. Price rises, then begins to flatten, and finally curves downward. There are no sharp peaks, no dramatic reversals, just a smooth transition from strength to weakness. Let's talk about the psychology behind this pattern. At the beginning, buyers are confident. Price keeps making higher highs. Momentum is strong. Then something changes. Each new push higher is smaller than the last. Buyers are still present, but less aggressive. Sellers start stepping in earlier and earlier. This is the key idea of the rounding top. Demand is slowly drying up. Here's a simple real-life analogy. Imagine a car driving uphill. At first, it climbs easily. Then the engine starts working harder. The speed slows. Eventually, the car can't climb anymore and begins rolling back down. That loss of power, that slow transition, is the rounding top. Unlike patterns like double top or head and shoulders, the rounding top does not have clear rejection points. Instead of sharp failures, you see gradual weakness. That's what makes this pattern especially important for swing traders and long-term traders. Another defining feature of the rounding top is volume behavior. As the pattern develops, volume often decreases during the topping phase. Participation fades, interest drops, then volume might increase again when price starts moving downward. Now let's talk about the neckline, because yes, the rounding top also needs confirmation. The neckline is drawn at the support level where price repeatedly bounces during the earlier uptrend. This level becomes critical once the curve completes. As long as price stays above the neckline, that trend is technically still alive. But once price breaks below the neckline, the rounding top is confirmed. That break signals that sellers have fully taken control. This is an important rule. A rounding top is not confirmed until the neckline breaks. The curve alone is a warning, not a signal. Now, let's connect this pattern with smart money concepts. Rounding tops often appear during distribution phases. Institutions don't exit positions all at once. They sell gradually into strength. Each small rally is used to offload positions. That slow selling pressure creates the rounded shape. You will often find rounding tops forming near major resistance levels, at all-time highs, in premium zones, or after long bullish trends. They are especially common on higher time frames like daily or weekly charts. Let's make this very practical. Imagine a stock has been rising for months. News is positive, sentiment is bullish, but suddenly each rally becomes weaker. Pullbacks become deeper. Price starts curving sideways, then downward. When price finally breaks below support, the uptrend that looked healthy quietly ends. That's rounding top in action. One mistake beginners make is trying to short the market too early during the rounding phase. That's risky. Price can stay rounded for a long time. The correct confirmation is always a neckline break. Another key detail: rounding tops often lead to longer bearish moves, not quick drops. Because the distribution phase takes time, the reversal often unfolds slowly as well. Now, let's lock this in with one final analogy. Think of a balloon slowly losing air. It doesn't pop, it doesn't collapse instantly. It slowly sinks until it finally touches the ground. That slow deflation is the rounding top. So, to summarize, the rounding top is a bearish reversal pattern that forms gradually after an uptrend. It shows low loss of buying pressure. Price action forms a smooth curved top. The pattern is confirmed only when price breaks below the neckline. In smart money concepts, it often aligns with distribution and institutional selling. The rounding top is the market saying, I'm not crashing, I'm not rushing, I'm slowly letting go.